So welcome, everyone. This is Square Peg Society's meeting on the disability tax credit and the registered disability savings plan. So all of the ins and outs of these two programs as prepared and presented to us by Disability Alliance BC. Our speaker today is Cynthia Min. She is the director of Disability Alliance BC's Tax Aid and Access RDSP programs. Alongside partner organizations, these programs have supported thousands of people with disabilities across British Columbia with income tax filing and related benefits, including the two that she will be presenting today, the Disability Tax Credit and the Registered Disability Savings Plan. Cynthia is on the board of directors for Plan Institute and is a community member for Emily Carr's Research Ethics Board. So with that, I will allow her to share the screen and we can begin. Okay, welcome, Cynthia.
Thank you so much. Thank you for having me, everyone. It's such a pleasure meeting you, and I'm very excited to start the presentation with you. Today, we're going to talk about the Disability Tax Credit and Registered Disability Savings Plan. Joette gave such a wonderful introduction about me, and I just wanted to also let everybody know a little bit about Disability Alliance BC. We've been around since 1977, and we are a cross-disability organization that supports people with disabilities, especially with getting and accessing federal and provincial disability benefits. We also have a number of programs that help with different benefits like the PWD benefit, CPPD benefit. We also have a tax aid program that helps with people with disabilities file their taxes. We have a disability law clinic that helps people who are facing discrimination because of their disability with legal advice and legal support. We also have a Rate Fit program for people who are full-time wheelchair users to access wheelchair accessible housing. And we also have a Karma program that helps residents of the George Pearson Center be matched with peer mentors so we can transition out of outside of that, we have a number of
just a second here, please. Could you mic yourself if you're not asking a question of our speaker? Thanks so much. Sorry.
No worries at all. So outside of that, we run a number of auxiliary projects promoting accessible legislation in BC and making sure that public sectors are adhering to that legislation. We also help a number of accessibility projects around the province by providing them funding for some initiatives that people and organizations are starting. So that's a little bit about us, and we also have some publications. All of that information can be available on our website.
You can right.
I don't know where.
www.disabilityalliancebc.org.
Just mute all.
Good, thank you.
Okay. I wanted to
Cynthia, you'll have to unmute yourself, please. I think Joette muted us all.
Thank you, Christophe.
Sorry.
I just wanted to acknowledge that Disability Alliance BC operates on the traditional and ancestral territories of the Musqueam, Squamish, and Tsleil-Waututh people, and that, you know, thinking about sort of where we are in the world right now and understanding, you know, sort of how our relationship is with the land, kind of honoring the land stewards that have been around since time immemorial, but also the people that are doing good work to reconcile everything that's happening right now and continuing the practice of land sovereignty and Indigenous sovereignty. So today we're going to discuss, disability tax credit, what is the DTC, how to qualify for the DTC, how to start the process, and helpful tips for qualifying. We'll also get into the RDSP. What is the RDSP? How to qualify for the RDSP? What are the benefits of the RDSP? And how to start saving with the Endowment 150 program. So what is the disability tax credit? Well, the DTC was originally designed to help cover extra medical costs that Canadians with severe and prolonged mental and physical impairments pay. It started out really to acknowledge people who were legally blind and acknowledging extra costs around medical costs. But it has over the years grown to include so many people that are facing, restrictions because of conditions that they might be having. The credit also helps people with disabilities reduce the amount of income tax they have to pay, and that's how it works at the core of it. In 2018, it was found that only 40% of Canadian adults with qualifying conditions benefit from the DTC because of significant barriers to access. And some of those barriers we might know are it's an overwhelming application process, or there might be financial related barriers or health related barriers. And we find that, a lot of people might want more information or what might even want advocate support with this application because it's a little bit hard to get the DTC. But it's still worth it. And why is it worth it? Well, I mentioned before that's a non-refundable tax credit that helps reduce taxes owing. How does that work? Well, the way that it works is that you can claim a portion of, or you can claim the full amount there, the disability amount that's listed there. It's $9,428. So when you're doing your taxes, this is the amount that you would claim if you were eligible for the DTC. Depending on your income and assets, and the amount of income tax that you pay, you would get a portion of this back in your tax return. There's also a child supplement. So for people with children with disabilities, you would be able to get another $5,500. And you would be able to claim that full amount on the taxes and get a portion of that back. The nice thing is that you can claim the credit for up to 10 years before you apply. So if someone's been living with their disability for a long time, and they've been working during that period, paying income tax during that period, they can get some of the taxes that they paid back to them for 10 years. So sometimes we find that if someone's been making an income for the past 10 years, they've been living with a disability, they may get something even around $15,000. Now, everybody's amount is a little bit different depending on income tax that we pay. For example, if someone has PWD or any other social benefit, they might not get a lot of money back. But for people who are paying taxes, this would help them. If they aren't getting any money back, you can also transfer unused credit amounts to a caregiver that helps pay financially for food, shelter, and clothing. So that's really good for people who aren't, they don't pay income tax, they might not benefit from a tax reduction, but they have a caregiver who does pay income tax and would benefit from that tax reduction. They can transfer it to their family member who helps pay for food, shelter, and clothing, and that credit amount can now be applied to their caregiver's taxes, any unused amount. The way that we usually tell people who are supporting family members to benefit is that the person can fill out their information on Part A of the form, which is the applicant's part. And there's a question 3 that asks about the person claiming the disability amount. That could be the person who has a disability or their supporting family member. They fill out their information and really detail how they financially support with food, shelter, and clothing. It's not going to be adequate to say how you maybe physically or emotionally support someone. They're really looking for the financial support here. But the way that it works is that the disability amount will be applied to the disabled individual's income taxes first, and then it will be applied to the support person's second, any unused credit amounts. Something to keep in mind is that while parents, legal guardians, and legal representatives can choose to have their taxes reassessed automatically just by filling out the form, Other family members will need to request an adjustment by letter or by filling out the T1 adjustment form after their dependent has been approved for the DTC. Let's say you don't owe taxes. Why get the DTC? There's still a huge benefit, and that's because the DTC is the primary way that the federal government really assesses disability in Canada. So what that means is a lot of tax-related benefits and other federal programs are tied to the DTC. Some of this includes Canada Workers Benefit. If someone is low income and working, and they make at least, $3,000, but under a certain amount, they might get the Canada Workers Benefit. If they have the DTC, they can get a disability supplement on top of that. Similarly, for people who are having low to modest income, they might receive the Canada Child Benefit. If they have a child with disability and they have the DTC, they can also get a child disability benefit on top of that. And that's a monthly supplement to help reduce childcare costs. Certain medical expenses can also be claimed by only having the DTC. That is attendant care or certain therapies. Disability supports deduction is also an important one. Certain benefits of the disability supports deduction are reliant on the DTC. There's the caregiver credit that makes it easier for if someone has the DTC, it makes it easier for their caregiver to apply for the caregiver credit and claim it. Anyone can claim the caregiver credit amount, but you would need medical certification in order to, in case the CRA audits you. If you have the DTC, you will not be asked for that medical certification. There are benefits for homeowners and home buyers. There are tax reductions for people who have trusts, such as a qualified disability trust, or they can also reduce the taxes they pay by electing to have a preferred beneficiary election. There are certain education-related benefits, and there's also the Registered Disability Savings Plan. That's a long-term savings plan that helps people financially build stability for their later years, kind of like an RRSP, and I'm going to be delving into that a bit later. So as you can see here, there's just so many reasons you want to get the DTC, and it doesn't matter if you're paying income tax, you still want to get it.
Cynthia, can I ask a question?
Yeah.
Can medications be claimed as under disability supports deduction?
Disability supports deduction is a deduction for anything that's required to go to work or school. So maybe you might want to claim medication in the medical expense credit, whereas disability supports deduction, you might claim things like a laptop or internet or things like that.
Okay, thank you.
Yes, and one thing that I wanted to note is that we want to think about how the DTC functioned in the past and might function in the future. So the DTC was very important when COVID-19 pandemic-related emergency benefits came out. There was a disability supports emergency relief benefit that was offered, a $600 one-time payment. And the DTC was used as a gateway support through that. We think that the DTC will play an important role when determining eligibility for the proposed Canada Disability Benefit. This is a disability supplement that is going to mimic the guaranteed income supplement. So kind of top off people's income every year to make sure that people are falling within the above the poverty line. And we think that the DTC will have some role in that. So just to forecast that and put it on people's thoughts and horizon a little bit. How do you qualify for something like this? Well, the DTC has no age restrictions. You can qualify and apply from birth to any age. It also doesn't have to do with whether or not someone can go to work or go to school. And it also doesn't depend on someone's income or assets. So someone could be making no money or having a very high income and still apply for something like this. What you do have to prove is that you have to have a severe and prolonged impairment. Impairments are described as mental or physical. Prolonged means that your condition has lasted or is expected to last at least 1 year. Severe impairment means that someone can qualify in 3 ways. The first way is if someone has a market restriction. They're very restricted in one activity of daily living. They can't do the activity, they need a lot of help to do the activity, or they take a lot longer to do the activity than most people. Someone might also qualify if they're restricted a little bit less, but in 2 or more of the activities. And the cumulative effect of these restrictions are equal to 1 market restriction. Someone might also qualify if they're in need of therapy that supports a vital function and also takes up a lot of time, which is 2 days a week for 14 hours a week. When we're talking about basic activities, the CRA categorizes it in specific categories. So we're talking vision, speaking, eating or making food, hearing, walking, eliminating, which is using the toilet, dressing, or mental functions necessary for everyday living. So again, someone could qualify if they're very restricted in one of these activities, or they're restricted a little bit less, but in 2 or more of these activities. How to apply. The nice thing about this form is that it's not reliant on just medical doctors and nurse practitioners. It is true that nurse practitioners and medical doctors can fill out all sections. So if somebody has both physical and mental health restrictions, you maybe want to look at a medical doctor or nurse practitioner to help with the form. But the nice thing is that depending on the disability, you can ask different specialists or medical practitioners to help with the form. People with restrictions in walking, feeding, and dressing, for example, may turn to their occupational therapist. In this case, maybe someone with speaking limitations might talk to a speech language pathologist. Somebody who has restrictions in mental functions necessary for everyday life might speak to a psychologist. There's no preferred medical professional, so it's best to use the medical professional that you're most connected to. We do usually suggest that someone hands in one form and has one medical practitioner. So what that might look like is, let's say you see a lot of practitioners, but you both have a physical and mental health restriction. So maybe you're going to go to your general practitioner, but they don't know that much about your restrictions. You might ask a psychologist or an occupational therapist to also write letters to your doctor to just tell them a little bit of your restrictions, just so they get a better sense of your restrictions before they fill out the form, so that they can provide adequate examples for the application. It is possible, if that's not the case, if you cannot make a relationship work, to submit different applications. And so, for example, someone might fill out a different application for speaking and mental functions. But I would suggest, if you are going to do that, to really make sure that there's no contradictory information. If there is, we can see that leading to a denial or additional questions being asked to your medical practitioner. So be very careful about that. Try to have one medical practitioner fill out the form. Okay. How to fill out the form? Well, there's different ways. The first way is a paper form. So that is form T2201, which you can get online. The applicant fills out Part A of the form. They take their form to the medical practitioner to fill out Part B of the form, and then they send in the completed form to the CRA by mail or online. The CRA is trying to make this a little bit easier of a process for medical practitioners, so they have created an online digital application for medical practitioners. The way you might be able to access that is by first filling out the section Part A of the form online through your CRA My account, or by calling the CRA, and what you might get is a reference number. You then might talk to your medical practitioner to finish Part B of the form online. And if you have gotten the reference number, you can give them the reference number at the stage. The doctor can also, or the medical practitioner can also fill out that form online without the reference number. So you can start by just going to your medical practitioner, but sometimes it's nice to give them the reference number. Once the Part B has been completed, you can send in the form to the CRA by mail or online. So the medical practitioner might print out a copy for you to send it in. But if you had given the reference number to your medical practitioner, they can actually submit the form online on your behalf. The only thing that I would suggest is maybe make sure that you know what is being submitted before it's submitted to the CRA. Sometimes medical practitioners might not be able to adequately detail and describe the daily restrictions that you face and you experience. So it's a good idea to see if you can double check what they submit. Some things to keep in mind is eligibility is not based on diagnosis. So it doesn't matter if someone has been not yet received their diagnosis. If somebody is restricted in their daily living activities, they would still qualify. And what's more important is providing specific examples about these daily restrictions. Sometimes people might encounter medical practitioners that may misunderstand the eligibility criteria, or they may think that, someone might not be approved, but we always encourage everyone we talk to just still try, that they can, from their medical perspective, put down what they think is the restrictions and what is reasonable, submit it, and it's the CRA that determines eligibility. So it does not hurt to try for this application. It's something that would really benefit individuals if they did get it. So we encourage everyone to keep trying.
Cynthia, can we delve into that a little bit more deeply? For many people on the spectrum, they will be applying in the mental functioning category. And give us some specific examples of what could be included as restrictions in activities in that area. For example, what we understand is that many individuals have trouble keeping jobs. They have trouble with understanding and responding to expectations in the workplace, or teamwork, or working in environments that have really harsh lighting or smells or too much sound or those kinds of things. So those are the fears that most of us have when we're applying, that they will look in a too limited way at mental health function or mental functioning.
It is really difficult. It's difficult to describe restrictions and to really think about that. I always say, think about yourself in a normal setting or a regular setting in terms of, it's an everyday setting. And if there are restrictions or accommodations or little things that you need to sort of regulate or to be in that environment, these are very good cues for what you would want to put in. And not to worry, I have examples both in the speaking function and speaking section and mental functioning section, just so everyone can get a sense and feel of what might be something to include. So let's start with the speaking section. The CRA will ask, a certain number of questions to get a sense of someone's position, and also if they take medication, if that medication is helping. So they say, do you primarily use sign language to communicate? Do you take medication? Do you use any device? And devices might include voice amplifiers or behavioral therapy. Do they require assistance from others? Things they also might ask is, specifically, do they have experience with, do they ever experience aphasia, difficulty with articulation, dysphemia, impaired ability to be understood without repetition, issues with vocal sound, unable to speak in certain situations, and how often do these occur? So very good thing to think about, like if there is a bit of a stutter or if there is word finding difficulty for a lot of people, this is where you would put something like that. Be very specific and provide examples. So usually what we put down is the patient has difficulty speaking so as to be understood by others. In their office, the medical practitioner must ask the patient to repeat words or sentences several times. So again, thinking about here, we're looking at a regular setting here in a medical practitioner's office. Is there difficulty articulating? Is there difficulty with word finding difficulty? Is there issues with selective mutism, for example? Those things are going to be important here. and definitely important, let's say, if you experience these things in, let's say, a public setting like going to a coffee shop or going to work or things like that. More examples of speaking. Patient has difficulty thinking of words they want to say and articulating what they want to say due to brain fog. The patient has stutter in social situations where multiple people are present and they're unfamiliar with due to severe anxiety. Patient might take 2 times longer to speak than a person their age without impairment due to shortness of breath from severe fatigue. Patient speech might include incorrect structure and ideas. So these are all different ways that symptoms might manifest in this section, and these are different things that you can put down. Mental function section is a little bit more complex because it also has subcategories. It used to be that there was only 3 categories in the mental function section, and now it's sort of expanded. And I think that's a good thing, but we want to think about what each of these categories are. Attention, really thinking about, is someone's safety compromised because of, feeling that something might be too dangerous or not being aware of dangers or risks. Concentration, that is, are you able to keep concentration for any length of time? Memory, questions might include, is basic memory function at a loss? But other things might include, short-term memory, something that is impaired. Is long-term memory something that is impaired? Everything here can be included as well. Judgment might include things like, are you able to make healthy decisions for yourself? But it also might include, do you second guess your decision making? Do you need validation from other people? Do you need assistance ever making decisions? Perception of reality really does have to do with whether or not someone experiences delusions or hallucinations. Problem solving has to do with, are you able to identify and then create solutions and initiate solutions to problems? Goal setting, again, thinking about, are you able to set goals but then take the initiative to complete them? Regulation of behavior and emotions, thinking about, are there cases where your behavior might be incongruent to a certain social setting, or your emotions might be incongruent to a certain setting? And and that might include things like flat affect or things like that. Verbal and nonverbal comprehension, really thinking about, are you able to follow the flow of a conversation, whether that be because of lack of concentration or because of hyperfixation? Things like that might come up, or it might be, difficulty comprehending. It might be, taking a longer time because of cognitive difficulties or delay, taking longer time to process information and to understand and then to respond. And then adaptive functioning has a lot of things within that as well. Really thinking about how you're able to perform, necessary tasks. So self-care tasks, going out into the community, performing, basic functions like going to the ATM and going to check out something at a counter. Those things are all important. So when you're thinking of hypersensitivity to environment, this is the section you want to put that in. Sorry, Miriam, did you have a question?
Miriam, could you unmute, please?
Yeah, who fills out this form, the doctor or the person or the caregiver? Like what part of I don't
That's a really
understand.
good question. Yeah, this is for your doctor to fill out. But what I really want to arm everybody here with is knowledge about your own restrictions so that when you do talk to your medical doctors, you're prepared to tell them specifically what your restrictions are. And that's because your doctor may not have insight into your daily restrictions. So really, what we suggest is, to keep a log of all of the information, and to be able to talk about specific things to your doctor.
And to have a copy that you can give to your doctor about the restrictions that you experience.
Yeah. Yeah, but if your doctor is very knowledgeable about your restrictions and can fill us out, then that's okay too. This is something for your doctor to fill out. So don't worry too much about the language per se, but think about the restrictions that you do face. So in this category, your doctor is going to have to fill out whether you have no limitations in each of these categories, some limitations, and very limited capacity. So, for example, in goal setting, they'll ask, is this person able to make and carry out simple day-to-day plans? Do they have no limitations, some limitations, or very limited capacity? And so, really thinking about what that means to have very limited capacity in this. In this case, with goal setting, it means that they are unable to make goals or daily set day-to-day tasks without support from another person. And that's the bar with very limited capacity. So anything below that might be some limitations and things like that. Okay. Really remembering that persistent and episodic symptoms may still qualify. For a lot of people who might be high functioning, you might think maybe my symptoms are not severe enough to qualify. That is not true. If you do have episodic symptoms, but they are persistent, can come at any time, and when they do come, it could be a very, very high symptomatic day, or when conditions are really flared, that really affects your capacity to perform some of these daily activities, that would still qualify. So still put that information. Also remembering that if you have very limited capacity in any of the subcategories of attention, concentration, memory, if you have very limited capacity for the whole section of each of these subcategories, you would qualify as a marked restriction. So it might be that you only have some limitations in memory and attention, but concentration, you might be very limited. You would still qualify as a marked restriction. So mental functions also includes questions like what devices do you use? Might be GPS, safety devices, memory aids. That includes, like calendars, notes, visual reminders. It also asks if the patient have an impaired capacity to live independently. If they cannot live independently, they're asking what kinds of support they might need. So it might be a long-term facility or assisted living facility, community-based health services, hospitalization, or just support from a family member. And for children under 18, really thinking about if they need supervision at home beyond an age-appropriate level. So the key word here is, compared to someone their age, what are their restrictions? So sometimes when we're thinking about children, we're thinking about, are they expected to reach certain milestones that are set for children? I just wanted to also provide some other specific examples. So in concentration, having difficulty maintaining focus on a subject for any length of time, easily distracted, we're leaving simple tasks unfinished. For example, like washing the dishes, but then, something else happens over there, and then leaving that task to complete something else. That's an example. Memory, taking longer to complete tasks, retrieving information. Anytime you're requiring visual and verbal reminders to manage the daily schedule is important. Verbal comprehension, difficulty processing verbal information due to cognitive difficulties. So these are kind of the examples there. And I just wanted to briefly mention life-sustaining therapy for anybody who has some comorbidities. If you're in need of life-sustaining therapy to support a vital function, that might include kidney dialysis, oxygen therapy, and insulin therapy. Then you might be able to qualify for something like this, as long as you have that therapy 2 times a week at an average of 14 hours a week. Since 2021, anyone with type 1 diabetes will be automatically eligible for the DTC for those years. You will have to prove that you were able to meet the 2 times a week and 14 hours a week for any years prior to 2021, but any years forward is going to be able to be automatically approved. The difficulty with this category is that some activities related to therapy can be included, but some cannot. So that's something to be careful of. So anytime you're traveling for the therapy, that time's not going to be counted, or exercising is not going to be counted. Those things are anything that's not you're doing that's not the regimented needed therapy, that's not going to be counted. So being careful there. In general, some tips. We want to tell doctors and tell our practitioners to use phrases like substantially all the time. Note when you require assistance and let your practitioner know. Note when you're unable to manage an activity. Note when you're taking 2 times or 3 times as long to complete an activity when compared to someone your age without the same restriction. And note when a child is not expected to reach milestones of the same age peers. But there are some things not to include. So I know that it can be difficult to work or do some of the activities listed here, but do not include ability to work, academic performance, housekeeping, managing a bank account, driving, or doing recreational activities such as doing sports and things like that. Mentioning these will confuse a CRA, kind of introduce other kinds of, competencies, and will make it really confusing. And we've seen people get denied or be asked for more information because they've included these things. What we say is the reason why we went through the spiel, as we just discussed, is because we want you to prepare examples of restrictions from your daily life to give to your medical practitioner. And we have a help sheet, a DTC help sheet that I'll share with Joette after this presentation, that you can use to sort of journal and have that format journal and talk about your daily restrictions. But if you need support with this, at Disability Alliance BC, we do provide free one-to-one support through this application. We'll sit down with you, talk through your restrictions, help create sample materials for your medical practitioner that they can just sign if they agree with everything that's being said, or they can use as a base for your application. We also have an online tool that you can use to just fill out online if anybody has that capacity. Fill it online. It's an online questionnaire. It generates a PDF for your medical practitioner to look at, and that will also create a base for them to use for this application.
That's great.
Okay. Submitting the application, you can mail the form in. You can submit it online through your CRA My account, and then also if you had that reference number, your medical practitioner may be able to submit on your behalf. Sorry, Miriam, yes, do you want to ask a question?
Yeah.
So I'm sorry, I'm going back to the previous thing. All these apps and tools and these things that you've told us about, are these all on the website? Can we look for them without actually contacting somebody and asking for it
Yes.
and all that?
Absolutely, absolutely. And I'll be sending Joette the links of everything that's going to be here, so you can
Okay.
definitely take a
Thank
look
you.
on your own. Yeah.
Thank you.
Before we go on, the bigger picture thing is many families are frustrated that they have to reapply after 5 years. And obviously autism is a permanent condition. And so we feel singled out from other disabilities, other developmental disabilities, because of that. We understand that the pot of money isn't limitless, and that perhaps there could be restrictions based on need, financial need, but the idea that our family should have to go through this process every 5 years is unacceptable to us. Do you see any change to that? Can you advocate for change to that?
Absolutely. It's something that, a lot of the more national groups that we're a part of, we're talking about that a little bit. And I'll talk a little bit in my next slide about what you might expect from the result of the application and some steps that maybe we can use towards some of that. So I'll just briefly go through this slide, which is a very short slide. It may take, usually around 8 weeks, actually. This is a slide where we're just sort of like preparing people for a longer wait. The processing time is usually around 8 weeks. And there's also an ability for you to check the status of your application. If you have a My Account, they'll usually have a file status tracker, and they'll just say whether something is ready, whether it's still in progress, and things like that. Sometimes during busy periods, we do see that it takes 3 or 4 months. So if it takes a long time for your DTC to be processed, don't be too deterred. The way that they're going to send you a decision letter is they're going to send you a notice of determination letter, and it'll detail a little bit of what you might be expecting. You can always call the CRA if you want to check the status of your application as well. Once the application is submitted, there are 3 things that might happen. The CRA may have additional questions, and what they usually do is they will send the additional questionnaire straight to your medical practitioner. Sometimes what I suggest is if you haven't heard back from the CRA, it's been more than a month, maybe more than 2 months, you want to ask the medical practitioner, did you receive an additional questionnaire? And this is because you want to, again, know what your medical practitioner is going to be saying in that additional questionnaire. More often than not, it's because the medical practitioner didn't put a lot of information in their application. And so this time you want to arm them with as many examples as possible. And DABC can help with this as well. We do help with additional questionnaires. If you can get a copy of that additional questionnaire, we can help fill that out for your medical practitioner. You also might be approved. Joette said, so some people might be approved, for a permanent number of time from 1 year to future years. That means that someone will not have to reapply unless the CRA asks them to. More commonly, people are approved for a number of years, and that's that 5-year period Joette was just referring to. I want to say first that if you do have a permanent disability like ASD and you have that 5-year approval, you are not alone. A lot of people with permanent disabilities still get this. And the reason is completely arbitrary. It's because the CRA thinks that there may be an improvement in restrictions and they just want to check in. And it is completely unfair for people whose symptoms will remain kind of consistent for their whole lives. And that is not just for ASD, but for a lot of cases. So what I do say, is like every part of your notice of determination letter can be appealed, including this section. So even though as a whole, systemic advocacy-wise, DABC is trying to, make it easier for people to not have to reapply, individually, you can also try to appeal this decision. We haven't had that much experience with this appeal, but we do help with this appeal as well. So we can provide letters and help your doctor provide reasons for an appeal for something like this. You might also be denied. So we usually say that denial is not the end of the road. It doesn't mean that you're ineligible. More often than not, it means that something happened with your application. There might not be enough information, or the wrong agent saw it, or something like that. So there are options. First, you can reapply at any time, provided that you provide additional medical information or something that they haven't seen before. You can also add medical information, and this is the one that we usually do. We usually help clients with reapplying and adding information. We also help people through the third option as well, but this is more often the case. What happens? 90% of people that come through our doors that have a denial, and we look at their application, the original application, we just see that the doctor has not filled in the application with as many examples as needed. And so adding medical information is a good idea to do that. Making sure it's consistent with what was put on the form, but just adding examples about how you're restricted is important. And then there's a third option. Let's say we look at the application and it's perfect. So many examples. There's no reason why something like this should be denied. Someone has 90 days to submit a formal appeal, a formal objection to the Chief of Appeals, first by writing a letter saying, I don't agree with this determination because of X, Y, Z. As it was stated in my original application, this has happened and I should be qualifying. Or they can take that to tax court, and we can help with each of these stages. So to come to us for support if something like that happens.
Sarah had a question as well, Cynthia.
Yeah,
So,
Sarah.
could you unmute yourself, Sarah, and you can ask your question?
Yes. So I'm actually looking at doing a renewal for my disability credit. So if it's something that was, I guess, I don't know if it's like a number of years, it was when my daughter was 6, now she's turning 19. So I guess aging into an adult, is that like previous approvals taken into consideration when they're redoing it?
So that's a really great question. The reason why a lot of people will be asked to reapply at the age of 19 has nothing to do with their eligibility. It has everything to do with their income taxes being moved from a family income to an individual income. So we see that even though children of the ASD have a permanent disability, a lot of people will be asked to reapply at the age of 19 just to provide, new tax information and things like that. So in that stage, good thing to keep copies of your original application, put almost the same information down, and then that person will be reapproved for their years. Okay. Any other questions before we continue? Yeah, Christoph.
Yes, many slides earlier, you had a list of different services that one can access when one has the disability tax credit.
Yeah.
One of them had to do with Canada Workers Supplement, home buying. There we go. Yeah, perfect. That is the slide. Does one have to ask for those services, or do they come automatically? How does one access these particular services?
Yeah, that's a really great question. Some of them come automatically. Things like Canada Workers Benefit comes automatically. So when someone has a DTC, the disability supplement will be automatic as well. And also the same thing for Canada Child Disability Benefit and Canada Child Benefit. But I will say that retroactive amounts for both of these things will not come automatically. So a lot of the times with retroactive amounts for these things, they'll only go back 2 years. It's a really good idea to write a letter to the CRA asking that all retroactive years for any of these 2 benefits will be claimed, and we can help with that as well. Some of them you're just claiming on your taxes, things like caregiver credit. So that doesn't come automatically, but you want to claim it in tax forms. Same with like things like home buyer's map or home accessibility tax credit. That is a tax credit that has to do with expenses that you've made to their home to make it more accessible. I think it's less relevant to this group, but these are sort of deductions that you would put on your tax form. Yeah, some of them are automatic in terms of you'd have to get something, for a qualified disability trust status, you would have to have a trust agreement. And qualified disability trusts are testamentary trusts usually. So they're sort of like trusts that are born when someone passes and things like that. So getting that deemed as a qualified disability trust, kind of talking about how the beneficiary of that trust will be someone with a disability tax credit, that's how something like that would happen. So some of them you might have to apply for, some of them are just automatic, and some of them you just claim on your taxes. I'm going to get into the RDSP right now. Yeah. But I will say, if anyone's having difficulty and have tax questions, we have a tax clinic, tax program that can help answer all these questions and help everyone get set up for the different tax related benefits that you're eligible for.
Right.
Okay, so Christoph asked a really great question that leads us into this. Remembering that the DTC is connected to all these tax related benefits, but also this federal savings program. And it's such an important federal savings program. And this one is not automatic. So this one, after you get the DTC, you want to open something like the RDSP. So I want to go into some of the basics first. What is it? The Registered Disability Savings Plan was created by the federal government as a long-term savings plan to help people with their disabilities and their families save for their future. So it really was born out of parents who were worried about what would happen to their children after they passed. And it kind of grew to include so many people and allow so many people to benefit from something like this. It is a long-term savings plan that kind of is like our RSP in that it is for later years, but benefits start rolling out at 60 instead of other retirement plans. Other things that are really good about it, it can help people even if they can't put any money into the plan. A lot of people are usually feeling like, I'm not gonna apply to this because I, can't put any money in. This is the plan to get to help with your long-term savings if you can't put any money into it, because the federal government puts in free money to the plan. Another big reason to get it, it won't affect other disability benefits. So for people with large inheritances or settlements, and they're worried about what will happen to their disability benefits, like the PWD assistance, this having money in the RDSP will not affect your PWD assistance payments. So something is really good about that. There's a lifetime contribution amount. You can have up to $200,000 in personal contributions, and then you can receive $90,000 in government contributions. All of that money, if you open it early enough, kind of grows, and you can watch your savings grow, and it can be a really important savings plan to have. Who qualifies? Well, to be eligible, you have to be a Canadian resident. That does not mean that you have to be a Canadian citizen. It means that you just have to have residential ties to Canada. You have to have a social insurance number, and you have to be approved for the disability tax credit. There's some age criteria to this. So you have to open the RDSP by December 31st of the year you turn 59 to open the plan. But in order to get that $90,000 we talked about, you have to open the RDSP by December 31st of the year you turn 49 to qualify for grants and bonds. If you're over 49, you will not get grants and bonds. Okay. How do grants work? So grants work this is the matching contribution. So your first 500 contributions annually will result in a 1 to 3 matching rate. So you would get $1,500. On your next $1,000 that you contribute, you would get a 1 to 2 matching rate, and you would get $2,000 for that. So a lot of times we say the magic amount to contribute is $1,500, and someone could get $3,500. There is a maximum lifetime grant limit of $70,000, and I will say that grant amounts are based on family income. So in 2024, it's based on $111,000 or less. And if you make more than that, you might still get matching grants, but it will not be at that 1 to 3 and 1 to 2 matching rate. You would be at a 1-to-1 matching rate at $1,000. So if you contribute $1,000, you get $1,000. RDSP bonds, how does that work? So someone with the RDSP can get the bonds even if they don't contribute, as long as their income is equal to $36,000 or less. The maximum someone can receive is $1,000 every year until they turn 49 years old. You can still get partial bonds if your income is between $36,000 and $56,000. No personal contributions is required, so a lot of times someone will just get it and get the bonds every single year automatically. And the maximum lifetime bond limit is $20,000. So $20,000 that you don't have to do anything for. There is capability to claim retroactive grants and bonds. So someone can get grants and bonds for up to 10 years before they applied, as long as they were DTC eligible for those years. So let's say you applied for the DTC, you've been eligible since 2014, you open up the RDSP in 2024, you'll get to be eligible for 10 years worth of grants and bonds. How do the bonds work? Well, they can be received automatically. So sometimes people will open their RDSPs and get $11,000 in their account. Grants, you do have to contribute to get them, and there are sort of yearly maximums of how much you can get in retroactive grants. So it's a good idea to talk to your financial advisor, because you want to contribute the specific amount in order to get all the amounts, and you might take a few years just to catch up and get all the retroactive grants that you're entitled to. The catch is that you can't access retroactive grants and bonds if you're already over the age of 49. So you have to open the account again by December 31st, the year that you turn 49, in order to get any retroactive grants and bonds. We do have an online calculator on www.rdsp.com if you want to check out how much you could make. Yes, Miriam?
Miriam, could you unmute?
I'm sorry, you said consult your financial advisor to
Yeah.
find out how to do the retroact. I mean, I didn't know about the retroactive and I'm very interested. But I don't know what kind of financial advisor, or I mean, who has a financial advisor if they're not doing
Yeah,
investments and things
yeah,
like that.
yeah. So it could be someone.
Where would you find a financial advisor that won't cost a lot of money and will
Yeah,
know about this kind of thing?
so it could just be someone at the bank. We do have Access RDSP is partners with Plan Institute, and they do have a helpline that can help determine amounts. But I will say you'll be unable to access grants and bonds, even retroactive ones, if you are already over the age of 49. So that's just something to keep in mind.
No, he's 23, so
Oh,
he should be
wonderful.
able to-
That's
Yeah,
great. That's great. Yeah,
yeah.
so
I'm sorry, what did you just, the last thing you said, you gave me
yeah,
website
I'll
or something?
I'll provide some contact information that everybody can use to call the helpline advisors at Plan Institute. And yes, and we can talk about it now. The difference, the reason why I said you have to contact a financial professional, and it could just be someone at the bank, is because really what they're looking at is, you know, they have specific calculations of like how much you can put in to attract a certain amount, and it depends on someone's sort of like profile and eligibility and what they're allowed to contribute. So that's sort of there's some sort of factors around that. But I will say sort of like every year the retroactive limit is 10,500. The way they calculate it is the first tier, it's 1 to 3 contribution first, and then they calculate the second tier afterwards. So what that means is just that the first year of your contributions might look different than your second year of contribution, because they're looking for you to make as many $500 contributions to get to that $10,500 number in your first year. And you might have some left over for your second year. Then they're going to ask for as many $1,000 contributions to get to that 10,500 number. And it might take maybe like 3 years to get through 10 years worth of grants and bonds, or sorry, 10 years worth of grants, if that makes sense. And we can talk a little bit more about that offline. Like, I can also provide that number. Something that I want anyone to be knowledgeable about is the 150 grant available from Vancouver Foundation. That's available for all children under 18 and adults who make under $36,000 a year, or who have received income assistance since 2008. It's just $150 right into their RDSP. Plan Institute, our partners, are the ones who administer it. Very easy application. You just get some free money to help it grow. I have some more helpful tools on the DTC and RDSP, guides for newcomers.
Sorry,
and
Cynthia, one other thing. Is that a one-time only or is that annually, that 150?
one time only.
Okay.
And then we also partnered with Prosper Canada to provide some specific guidance on what we consider the 4 principal disability benefits, PWD, CPPD, DTC, and RDSP. So I've included those links as well. I just wanted to quickly finish so we can have time for more questions. If you have more questions for us specifically, this is our contact information. I will also send an email to Joette with all the other contact information you might have, including Plan Institutes, all the links that are provided in this email, and some helpful resources as well. Thank you so much. And if anyone has any questions, I think I'll look at the chat now and I'll
Christophe,
see.
go ahead.
Yeah, thank you, Cynthia and Joette, first of all, for doing all of this. It's absolutely wonderful. I'd like to, Cynthia, I'd like to go back to something you said earlier about RDSP contributions versus the PWD status, especially when it comes to lump sums such as inheritances.
Yeah.
I'd like you to repeat what I understood from that is that lump sum that one receives may affect PWD, not status, but monies that come in. And I understood that the RDSP might be a vehicle to avoid this. Could you explain a little further on this, please?
Yeah, that's a great question, Christophe. So if you are receiving PWD, there are income and asset limits. The income limits are you're not allowed to make over $16,000 right now. The asset limit is you're not allowed to have more than $100,000 as in assets in total. That doesn't include your principal residence, but it does include everything else. So when someone's getting something like a settlement or inheritance that might help make someone exceed that $100,000 limit, they're in trouble now because then their payments might get affected. It might be, determining sort of like different kinds of eligibility, or might be their PWD payments might be deducted dollar for dollar. It depends on what their situation is. So a lot of times people are kind of worried about what will happen. There are some savings vehicles that are considered exempt assets for the PWD purposes. And RDSP and disability trusts are two ways that someone can save their money somewhere without it affecting the disability benefits. And so this is definitely one of them. Yeah.
Great, perfect. And if I may, I did have another question.
Yeah.
I will need to reapply for the DTC and I will do my very, very best to qualify. It was a stretch to begin with. Joette and I had a long conversation about this at one point, you'll remember. I would like to know, in case of the DTC not being granted for anyone, what happens to the RDSP that is already existing if one already has one, which is indeed my case? What happens to the RDSP?
Okay, great question. So if someone loses DTC eligibility and they have an RDSP, what happens to it? So if this all happens before the age of 60, it used to be that you'd have to close down the RDSP. And that was very sad because that meant that all grants and bonds was returned to the government. You'd be able to keep everything else, but you'd have to return some money to the government. Now it's not the case. Now, if you lose DTC eligibility and you never regain it and you have your RDSP, your account is essentially frozen from the date that you lost DTC eligibility. So for example, you lost eligibility in let's say 2015, your account now stands as if it was 2015 onwards. That means that it is frozen until you're age 60. If you try to make a withdrawal before that date, you're still subject to a withdrawal rule. You're subject to paying back the grants and bonds that have been put into that account 10 years before it got frozen. So that is 10 years before 2015, essentially. So really you want to keep that money frozen. There's no contributions that are made into it by yourself or by the government until you're able to take it out at age 60. And so that's sort of what happens to that account.
So there's two things about withdrawing the money. There's age 60, and that's when the RDSP needs to begin being collapsed, if I may say so. However, there's that 10-year rule. So am I hearing that one can actually withdraw then money out of it once that 10-year rule has passed before reaching the age of 60?
That's right. But I want to make clear that the 10-year rule, I wonder if I can present this. Okay. So I want to make clear that the 10-year rule has to do with you don't want to take out any money for 10 years after the last grant and bond have been made into the plan. Because even if you're still receiving grants and bonds, it doesn't matter. I'll start by saying any grant and bond that has been in your account for more than 10 years is vested and is yours. But you still don't want to make any withdrawals from your account if you are still receiving grants and bonds, because you'd still be liable to pay back the grants and bonds that you're currently receiving back to the government, right? So basically, you want to wait from 10 years after the date that you received the last grant and bonds that you will ever receive. Wait 10 years and you can take that out. So if someone opens their RDSP early enough, and that could be, you know, years 20 or under, right? Or even 23 and under kind of thing. You get all the grants and bonds that you're able to receive, you make all the contributions that you're able to receive, and you have maxed out those contributions. And I think the earliest maybe might be around that 20-year mark. After 20 years, you wait another 10 years. So after 30 years, you can start to withdraw without any penalties.
I think I got it. Thank you very much.
Okay, and Cynthia, what about, okay, the account, you lose you lose eligibility for the DTC, but you've got your RDSP. What happens if, so I understand you no longer can make contributions and you can no longer get the grant portion, but you should get investment income still, right?
Yes. Yeah.
Okay.
Yeah, it's still an investment, so it still grows. And that's a great part about just having it present. That's a great question, Joette. I'm really glad that you asked that. Let's take some from the chat.
Yes.
Does someone have to ask to receive those benefits listed earlier? Okay, that was great. Christoph has asked his questions already. Will we get the lecture slides? Yes, you will get the lecture slides. Lifetime contribution from government on RDSP. You mentioned a figure of $90,000, then you mentioned a figure of $70,000. How do they relate? That's a great question. I'm going to go back to, share and go back. So the $90,000 are, $90,000 are made up by 70,000 maximum. Can you see the slides?
You just passed it.
Okay. Yeah, so
There.
90,000, this number is made up by first the $70,000 that you're allowed as a maximum lifetime grant limit, plus the $20,000 that you're allowed in the bond limit. So 70 and 20, and that's the amount of grants and bonds that you can receive. Yeah. Any other questions? Okay.
And was there anything else in the chat?
I don't think so.
Okay, good.
Sorry, I did one other question. So that the $70,000 and $90,000, I understand. I suppose there are ways to keep track of the bonds and the grants that are being given, and it's up to each and one to do this, or is there something within the CRA accounts that can easily give those numbers?
Yeah, so when you're opening your RDSP, you're doing so at a financial institution, and a lot of the major financial institutions do offer the RDSP. So that's great, and you don't need to say anything except for I have the DTC, I want to open the RDSP. But what that does mean is that the way they administer the RDSP is very much up to the financial institution that you go to. So there are some financial institutions that are very good about giving you updates about your RDSP, and then there are some institutions that are not very good at that. And we're definitely working hard to make sure there's some more regulatory practices that happen across the financial institutions, but right now it's very much sort of up to the financial institution how they handle RDSPs to really tell you what's happening with your RDSP, when you can take money out, what's happened to all the bonds, and what's happened to all the grants. And sometimes I think, as Miriam was talking about, sometimes there's not a good financial advisor where do you go? There is sort of like a helpline advisor that you can go to, but I would also, as Christoph mentioned, like if there's a way and you have, someone around you or you yourself can maybe like take note of things that have been happening with your RDSP, then you're giving yourself the best chance to really understand what happens after with the money. Because the truth of the matter is, because this is not a profitable plan for banks, they don't really, we've seen that, education amongst, financial sectors in financial institutions, it doesn't really happen. And we see a lot of people that are working at the branch level that just even don't have any idea about the RDSP. So unfortunately, it's still the case. The case with so many things that people with disabilities have to be their own advocates. But it's something that you can do to sort of arm yourself with the knowledge. And if you need any communication, any help communicating with the banks, at DABC, we definitely, try our best to offer that one-to-one support to help people through difficult scenarios and difficult cases. Yeah, because we recognize that that's a huge gap. Miriam, do you have something that you wanted to add?
Yes, I'm looking at this, if their family income thing. When does an individual become their own family rather than part of their parents' family?
That is such a good question, Miriam. So it is sort of the legal age of, it's at 19 years old that someone's going to be able to, their income's going to change from their parents to their own. And something to keep in mind is if you are able to open, so when you're thinking about the RDSP, you're thinking about the beneficiary, but you're also thinking about holders, so people who are managing the RDSP. If you are opening the RDSP for someone before they turn 18, then it's the parents who are the holders and the child who's the beneficiary. If you're able to do that, then you can actually continue to act as holder past the age, and when they turn 19, you're still going to be able to act as holder. But if not, then you are, you're definitely, it will change, the holdership will change to the child if they
So
open
then
it
it will-
after 18.
Then it will be the child's income that's
It'll
considered
be the
rather.
child. Yeah.
And what if they're like a student or something? Like, does that make
No,
it go up to 25 or?
unfortunately, no. But it's maybe a
no, I
good thing that their family income is going to be their own at that age, because it's gonna, they're gonna make less than this amount and they're going to be able to get the bonds. Yeah.
That's what I meant, even if they're a student, so that for some purposes, they're still dependent on their parents. They can still, whether they get the bonds or not will depend on their own income rather than their parents after 19.
Exactly. That's exactly right. Yeah. If they're a
That's
student,
even if the parent is still the holder.
yes. Yeah.
Oh.
Yeah, that's correct.
Okay, so that's good. So after 19, they can, if their parents had an income over this, that doesn't count anymore.
Yes, if the parents were holders before they were 18, then they can continue. But parents cannot be the holders of someone who's deemed contractually competent past the age of 19.
Yeah. Okay, thank
Christoph?
you.
Yes, Cynthia, there's something I want to verify with you. You mentioned the age of 19. The RDSP, though, is a federal product. Is it not the age of 18 where one actually becomes their own, where the income of the person with the disability becomes the owner of it and also receive the grant according to their income, or is it age 19?
Yes, that is a little bit confusing, and I'll have to double check, but in my understanding, they use the age of majority, and age of majority in BC is age of 19. That said, I just want to quickly look here. Yeah,
I,
no, it's correct. Yeah, it's age and majority. So beginning the calendar year that the beneficiary turns 19 until the end of the calendar year, the beneficiary turns 49. The family income is based on his or her income, and their spouse's income.
Miriam?
Yes, Mary.
Right. I'm sorry, I forgot whether you said with the bond. I mean, if
Mhm.
if the person became eligible on their own income after 19 and they started their own our DSP at that point, do they get the bond automatically, or do they have to apply for the bond?
Yeah, that's a really good question. They don't have to apply for the bond, but what they do have to do is do their income taxes. So if they do their income taxes consistently, then the government will see what they're eligible for. Yeah.
Okay. All right. Thank you.
Yeah, no worries. These are such wonderful questions, I have to say.
What you mentioned about the financial advisor piece of it and the inconsistency there, it's true, but one of the selling points in the inauguration of this to the banks and to the government was that it was that people have families, and that even though it's not a obvious moneymaker for the banks, that they bring their business to institutions that are providing this program, and so there will be that variability, but there are some banks, like we found, I think Aaron would agree, that the Vancity has been quite receptive, and that you can, develop a relationship with your financial advisor there and contact them annually and see how your RDSP is doing, and change the components, stocks and bonds and what risk you'd like to take and all of that. And so it is a learning process for the individual who will be managing it themselves. And there can be engagement there, but I think you have to pursue it.
Yeah, absolutely. I'd say, the reason why I think that people have such a misconception about the RDSP being a profitable, plan is just because there's so much misconception still about disability and how prevalent that is, and how many people live with disability and how many people will live with disability. And so it really is one of these cyclical things that because of that initial misunderstanding and, a little bit of like ableism in society, you get this sort of like, othering factor. But I definitely think that little by little there's a lot of appetite to be more inclusionary and to understand, that people have different needs, and these needs, and that more people are eligible for the DTC, which means that more people are eligible to open the RDSP. And all of that is definitely another cycle that can be reiterated and continue to make the changes. I have heard myself that Vancity is a little bit of more welcoming space. I will say, from the behind the scenes, I think they are also still struggling to educate all their branch level workers, and it still kind of does have that departmental siloed experience. But I think that's a really good example of people that will try to work with you, and no matter where you go, I think there are champions of the RDSP anywhere. So just kind of like working with someone, not being afraid to do this, and knowing that you'll have support somewhere is a good start. Miriam?
Again, unmute Miriam.
I keep forgetting that. Yeah, Joette or anyone, can you provide recommendations of people that you've already found to be good with this? Because we had a horrible experience with TD. It was such a runaround, and we still don't know what's going on. So if we know already that someone is good, it would be nice to know that and be able to just go to them.
Cynthia, I mean, we've been with Vancity consistently, so we don't have any other basis of comparison, but you might have something to offer in that regard.
Yeah, well, I think, when you're choosing a financial institution, it's really difficult because you're thinking about one how does the financial institution manage the RDSP? And with TD, you know, they have people that manage the RDSP, but they also have this like self-directed program. And a lot of people are rerouted to the self-directed program when they might not know about investments and stuff, right? So that might have been the experience there. And I think I've heard a lot of negative experiences about that instance. And it's really just for people who are really savvy at investments for that specific program. And different financial institutions handle their RDSPs differently. So really like doing a bit of a research on how different institutions handle the RDSP. Like some people, the branch level won't have any idea about the RDSP. You have to call in and call a number. And so that's something to keep in mind. We're like, do I want to do that and always call into an external number in order to get help on the RDSP? And that's another consideration. So that might be something that like, I think that CIBC has, if I'm not mistaken. And then you want to think about like, yeah, what's a welcoming environment? And that's where I think that credit unions might have a little bit more of that approach, that community approach already. And that's why you might choose something like Man City. There are different considerations, and I will say calling the helpline at Plan Institute that I'll give you is really great. I'm just going to pop it in the chat right now, just so people who don't receive the email can still call. Because these are really great questions, and I think that the helpline advisors would be able to give you a little bit more of a comprehensive response about what to look out for when you're thinking about financial institutions.
While you're doing that, I want to comment on something that you said about that stigma that's out there and how that makes some people shy away from these very useful programs.
Mm-hmm.
And it is a double-edged sword for all of us. People are afraid that if they are speaking in more diverse affirming terms, that they're conveying a message that there's no need there, and that they may lose the argument for supports and benefits. And really what we want to do is come at all of this from a non-stigmatizing, diverse affirming way that still recognizes there's a need for supports and services that will allow people to be the best they can be, and therefore cost the government less money, right? And result in more positive mental health and more positive engagement with the community at large. And so we all have a role to play, I guess I'm saying, in working toward that end, in saying that, you know, stigma and isolating or separating people is unacceptable, but that to ask and in fact demand the supports and services that we need to be the best we can be.
That's very well said. Thank you, Joanne.
Any questions or comments that anyone wants to make about any of this? Okay, Cynthia, we're right on time here. Oh, Christopher's giving us a thumbs up. Thank you so much, everyone, and I really appreciate your attention and your consideration of all of this. As soon as I can, I will add the resources that Cynthia is going to give me and get this out to you. Thank you so much, everyone. Much appreciated. And you especially, Cynthia. Thank you.
Thank you, everyone. Such a pleasure. It was so nice meeting everyone, and have a wonderful weekend.
Okay, bye. Happy Family Day.